As you know, this last month has not been kind to the stock market. All three major indices saw substantial declines in October, and my portfolio was no exception to that. Pretty much all of my stocks were in the red by a lot, which currently leaves me with some of the greatest losses I've ever seen, and we'll be talking all about that in this month's portfolio update. But before we get to that, in case you're new to the channel, my name is Ryan, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, guys, leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any cool milestones? I want to hear all about it in the comments. Anyway, guys, if we take a look at my dividend portfolio tracking spreadsheet, which you can start using for free, there is a link to download this in the description of the video. But this has my current value at $45,971.49, marking the second month in a row of substantial losses. And this puts me down officially over $2,000. I'm down 4.3%. And I think these are the biggest overall losses I've ever seen in this portfolio since I started investing a few years ago. And on one hand, it definitely stings to be down this much. It doesn't feel good to see your stocks losing value. But then again, on the other hand, there is a silver lining to this, which we'll talk more about momentarily. But first, in the month of October, guys, my portfolio saw an $1,800 loss, which is crazy. And looking at how this is broken down, I lost over $2,000 of share price returns, but thank goodness for dividends, guys. I actually had a really solid month of income and brought in over $200 with some of my biggest payments coming from Blue Owl Capital Corporation, which paid me about $38.50, KRC, which paid me $41.50, and Altria Group, which blessed me with my biggest dividend payment of all time, coming in at just over $50. Anyway, despite my hefty month of income, I was still down about 3.8%, but the rest of the market was down, and I am glad to see that I at least saw less of a drawdown than the S&P, which was down 3.9%, and the NASDAQ, which was down 4.36%. Now, I thought September was a pretty poor month, and we saw a lot of stocks coming down in share price, but October did not hold back from adding insult to injury. Just like in September, there were no shortage of stocks seeing double-digit losses. I mean, if we keep scrolling, we can see just how many there are. And like I said a moment ago, on one hand, it can be disheartening to see all of your gains and then some getting wiped out in such a short amount of time. It definitely doesn't feel good. But then again, on the other hand, you know what happens when a stock share price goes down. The dividend yield goes up, creating an exciting opportunity to acquire more shares of your favorite stocks at a discount while generating a higher cash flow return on your investment. This is what I often refer to as the double-edged sword of dividend investing, and I've linked a couple articles down in the description of the video where I tell you more about this. But in general, if you have a long-term time horizon and you don't plan on selling out of your investments anytime soon, then you should embrace this double-edged sword and seize the moment when your share prices are taking a tumble, because these market fluctuations can actually work to your advantage. What you got to do is just stay disciplined, just keep feeding your portfolio, and remember that this is a great opportunity to lower your cost basis, lock in a higher yield, and make your investment dollars stretch farther. Anyway, guys, moving on and taking a look at my best and worst performing stocks for the month, there's really not much good to speak of. The only stocks that were up any significant amount were Verizon and Intel, both of which reported some pretty strong numbers for their quarterly earnings. And with that, there is no short supply of poor performing stocks this month. I have quite a handful that were down double digits in October, starting here with Chevron that was down more than 15% after announcing a deal to acquire a company called Hess Corporation. Additionally, supply concerns over the situation in the Middle East have impacted the price of crude oil, which also had an impact on the company's share price. And then my second biggest loser for the month was none other than KRC, who was down 11.3%. And from what I could tell, there wasn't anything specific to the company that was pushing the share price down. As you guys know, a lot of REITs are just getting crushed right now. In fact, KRC actually put out some really positive earnings last month, but it wasn't enough to turn the tide for the share price. And then my third worst performer was Lowe's, who was down about the same amount as KRC. And I talked about Lowe's in one of my recent videos as being one of my preferred stocks to buy right now. I just cannot believe how much it's come down in share price. And over these last couple of weeks, I actually started throwing some more money into it again. And I'll show you guys that momentarily when we get to my transactions. But taking a look at some of these other losers, AbbVie was down 9.25%, Blue Owl was down 7.4%, J&J down 7 1/3. We had Williams-Sonoma down 7 1/4, Altria down 6 1/4. But anyway, as mentioned earlier, all of these stocks coming down in share price have created some really good buying opportunities. And I already told you guys I started adding some more to Lowe's. And actually, if we take a look at my transactions over this last month, I haven't added too much to Lowe's yet. I've only invested about $80 and picked up 4 shares. And I definitely plan to keep adding to it. But anyway, moving on, I also added $80 to Johnson & Johnson, picked up half a share of that. And then I went hard on Realty Income this last month, guys. I invested over $500 into this one company money and picked up 10 shares. Then I also invested $280 into my Roth IRA, bringing my total purchases for the month to $945.27. And then taking a quick look at my Roth IRA, this is officially dipped down under $5,000 again. We're sitting at about $4,900. And in the last month, I saw a pretty big loss. This portfolio was down 4.7%. And if we switch the view looking at his all-time performance, I am down 10.5%. So I'm seeing quite a big loss in my Roth IRA. And with that, guys, if we take my main portfolio valued at about $46,000, that's bringing in $2,278 of income, and add that to my $4,900 Roth IRA that is bringing in almost $150 of dividend income, this brings my combined portfolio value to $50,881.06, and I am bringing in $2,425.67, which is about a $48 gain compared to my projected annual income this time last month, which was sitting at $2,377.73. And looking at this on a year-to-date basis, I've added over $400 of projected annual dividend income. I started off 2023 at just over $2,000, and like I said, we've bumped that up quite a bit. Anyway, switching gears and taking a look at my watch list, I made a few tweaks to it in the last month. The first thing you'll notice is that I removed Shutterstock, and there was a lot that I liked about this business. Strong financial growth, negative net debt, attractive dividend stats. But as I thought more about it, I couldn't come up with what specifically made Shutterstock superior to the rest of its competitors that operate in this highly competitive and fragmented space. Like, for example, what makes Shutterstock a better platform than something like Adobe Stock, which is also very popular? I couldn't wrap my head around that, and maybe I'm missing something, but ultimately I just don't know that I have enough confidence to add Shutterstock to the portfolio. But anyway, the other tweak that I made was that I added Norfolk Southern Corporation, NSC, to this watch list. And I think this could be a good one to look into. Railroads have an extremely high barrier to entry and have historically been pretty steady investments, as they're an important part of our global infrastructure. And Norfolk Southern has taken a pretty big hit. They're down 25.5% this year, and then in the last month, they're down another 6.4%. So I'm wondering if maybe there's a potential buying opportunity here. I want to look deeper into it to figure it out. And speaking of buying opportunities, if you're in the market for some deeply discounted dividend stocks, then check out this next video right over here where I'm telling you about 3 of them, all of which look like great pickups right now in the month of November. So click right over here to check them out, and I'll see you in the next one.